So I probably shouldn't start by telling you how much I don't like Dolmar, Francis, and Brian.
No. Don't say that out loud.
Never.
Don't say that out loud. All right, everybody. Tim Bratz here with the Legacy Wealth Show podcast. Excited to be coming to you guys today. Got my good buddy and business partner, Fadi Boumitri, here out of Cleveland, Ohio, and talking to you guys a lot bit about different relationships, attracting A players into your business, kind of the mindset shift of what took both of us from being small business owners and solopreneurs to then joining forces and building a big business out of it. Multiple hundreds of millions of dollars of assets in our portfolio. And, we're going to hit $1 billion over the next 24 to 36 months in assets and property. And we're going to launch a big fund. And we're going to talk to you guys about that whole, transition and how we've grown and how the snowball effect really kicks in. So Fadi Boumitri, appreciate you being here, brother.
My pleasure, man. Always a pleasure to be around.
Cool. So let's talk a little bit about, I guess, how we met, just high level. Fadi and I actually went to high school together. He's a year older than me. We played basketball together, knew each other in high school. We were kind of buddies, but not like tight friends. And then knew each other in college, had some mutual friends, and saw each other in college and stuff too a little bit. And then I moved out to New York City and then Charleston, South Carolina. Fadi got his law degree here in Cleveland. And when I came back from South Carolina after I got engaged and married to my wife, was starting up my real estate investment company here in at the end of 2012, beginning of 2013. And so contacted Fadi, and I knew he was an attorney and I knew he was a business attorney, and ended up reaching out to him and asking him to be our business attorney. So anything I missed there?
No, just, as soon as law school ended, I hung up my own shingle, started working on my own. Came from a family of entrepreneurs, so I always wanted to do the same thing, wanted to be out on my own. And when Tim came around, I had been a few years into my practice, and he gave me a call up and said that he was looking for a few things. I was happy to put some of those together, and then basically every year you grew and our business together grew, and I got to see from the inside everything that you were doing, and it was always kind of fun to watch as you grew bigger and expanded into different assets, and even more so how things went well and how some things didn't go as well, and how you reacted to those things and what we were able to do in various situations. But essentially the relationship really became what it is today, based on 6 years of being your attorney in various different,
knowing the inside and out. And he still wanted to be my attorney or partner up on some stuff. So means a lot. One, appreciate you and all that we've been through together. And I think you bring up some really good points. Maybe we should dive into some of that stuff, because a lot of people see kind of where you are today. They don't see where you came from and all the grind, the getting kicked in the nuts, all that comes with getting to where you are. I mean, I've been in real estate, bought my first house 10 years ago this month, and been bad at real estate for probably 6, 7, 8 years, and got pretty good at it the past couple of years. But you got to go through a lot of that in order to get to the place that you're at now, right? And so let's talk early on. 2012, 2013, the beginning of 2013 is when I bought my first apartment building, actually. So I was doing a little bit of everything. I was buying single family houses to flip, like higher end stuff in the $300,000 price point. Lower end stuff, $100,000 houses. Again, I'm in Cleveland, Ohio, so that's kind of the market here. And then we were looking at, some single family rentals in the hood. This is 2012, 2013, where we were buying single family houses for $10,000 or $20,000 that were already rented for $600-700 a month. And then it fell into an apartment building. Found an 8-unit apartment building for $30,000, put another $50,000 into it, all into this thing for $80,000, and $10,000 a unit all in for a renovated building. And it's kicking off about $27,000 a year in net income. So a 33% return on my investment on that thing. And And meanwhile, Fadi's doing a lot of our legal work. So he's handling evictions, right? You were handling business docs that were being drafted, anything else that we needed, leases, all that kind of stuff. So knows his stuff inside and out from a business and documents standpoint, and understands, although he's an attorney, he's more of an entrepreneur, just found himself in an attorney role, right? And so I always knew that he was very entrepreneurial. That's why we got along really, really well, because he could see it not just from, you know, the standpoint of what do you do in this situation? Can you do it or can you not do it? It's how can you make this happen and maintain legalities and do it the right way, right? Anything you want to talk on that? So, I'm sure there's some points.
I can go all day on that. How many times I've had people come to me and tell me that, you know, I'm not like the other attorneys they've talked to, because most of them just tell them, no, they can't do this, and no, they can't do that. And the reality is there's a lot of things that you can't do from a legal standpoint. But what a lot of attorneys will shy away from telling you is that, you know, there's risk and reward. And sometimes you have to take those risks, even though, you know, hey, you know what, from a legal liability, not a legal, I should say a liability standpoint, that's a high liability proposition. And an attorney, as the person who's supposed to reduce your liability, will tell you not to do that. As a business person myself, I'll tell you that the liability is outweighed by the potential benefit and what you're gonna see as a return from that. And so, you know, sometimes it makes sense to put your boots to the ground first and then clean up the documents later. Now, of course, I've also been on the other side of that too many times, where people decided they were going to start a business and not put any documentation together at all. And, you know, eventually that ends up with an attorney trying to clean it up. And it's always much more expensive that way. But, you know, there is something to be said for the weighing the pros and cons of making the business decision versus making the smart legal or liability decision. And I think that's where you and I kind of always got along, is we were willing to have a long 1 hour conversation as opposed to a simple yes or no on anything.
How can we make it happen? The resourcefulness is always something I look for in partners and employees and people I joint venture with. Is don't tell me that I can't do something. Tell me how I can do it and stay, you know, within the bounds. Obviously, you want to keep everything legal, moral, ethical, and never ever push any of those risks. But at the same time, there's ways to get around things, or there's ways to figure it out, you know. And like Fadi said, sometimes, you know, it might not be a major risk or a major liability. Yeah, maybe something, but the benefits far outweigh the potential risks. And I'm not saying, you know, push the boundaries of, you know, not doing something legally. It's just like, do you need the documentation perfectly executed and every little T crossed and I dotted before you actually start taking action on your business? No, sometimes you don't necessarily have to do that. If somebody's willing to sign a big deal and you can move forward, and doesn't have to be all dialed in. Sometimes if it's a smoking opportunity, a smoking apartment building, for instance, and the attorney, they say, hey, I need this thing executed right now, today, and the attorney can't get to it until tomorrow. Sometimes it makes sense, right? You just got to juggle the pros and the cons on that stuff. So
yeah, again, you're taking a legal risk there. And, you know, what I said before, legal, when I say legal, I don't mean he's going out to try to kill somebody, or he's stealing or anything of that sort. What I mean is, have you put together the documents to do this in the right legal way? Have you done it in a way that limits your liability? And sometimes, even though you haven't, you have to take the risks and you have to take the chances, because the pros outweigh the cons, and you can't wait on some other people. Now, I always tried to make sure I got documents back to my clients as quickly as possible, and I prided myself on being available at times when other attorneys weren't. But the reality is, sometimes you can't wait on somebody else for something, and you've got to get something done now. Now, you got to make sure that you're at least doing your baseline due diligence. You shouldn't go out and make deals with people you've never met before, or people that you already know have a tendency not to do things in a proper way. No, of course not. But, you know, I've had people come to me and say, hey, me and my wife are starting to invest, and we're thinking about doing X, Y, and Z. And we went to an attorney, and he wanted to put together this elaborate plan for us for $15,000, $20,000. And my question for them is, how much have you invested so far? And their answer is nothing. And I go, well, why would you spend $15,000 or $20,000 to do something you haven't even started doing? You don't even know, once you jump in, if you're going to want to stay in this thing. You got to get your feet wet a little bit. You've got to do things in a responsible and smart way, but also don't don't shy away from the risk as an entrepreneur. If you're not taking at least some risk, then you're not going to get any reward from it either.
Yep. Love that. So I have a couple of things I really want to make sure that we hit on, which is a little bit more about how we started partnering on deals together. I think that's really important to talk about that. And then also Fadi has invested in projects with us. He's obviously our in-house legal now, our in-house attorney now, and is partnered on all of our projects today, and helps raise money for our deals. And then also, what else are you doing?
Everything.
Running the fund. So we're launching a fund. So we'll be talking about a little bit about that too. So let's fast forward though. So you had mentioned something regarding partnerships, and we're coming to you telling you about how good of a partnership we have today. He had actually mentioned something about a bad partnership that broke up. So when I came back to Ohio, I partnered up with a couple of guys who kind of put up the money. I did the work, and then we just kept on reinvesting all the profits. And there were a couple moving parts. For different reasons and different alignment of visions, of long-term goals, and who was carrying what weight. They could tell you a story. I could tell you a story. It's probably somewhere in the middle of what it actually is. And so I'm not going to tell you that, my side of the story. For whatever reason, it didn't work out. And it was a very, very, very difficult and very stressful time in my life, to the point where they thought they should be overcompensated. I thought I should be overcompensated or more compensated. And we ended up both loitering up. And I contacted Fadi as our business attorney and said, "Hey, dude, what do I do in this situation?" And Fadi said,
well, first, obviously each side had to get their own attorney because I was representing the LLC.
So that's where I was going with that. And he said no.
Well, I had the ethical obligation to say no. And so Tim went and hired his attorney, and his partners hired their attorneys. And I was on basically every call, from the company's perspective, trying to make sure that they knew what was going on with the company. And thankfully, there was a strong, long operating agreement in place that kind of spelled everything out. And you guys were able to clean things up. But more important than anything, this is one of the reasons why Tim and I got along so well, because throughout this entire extremely stressful process, Tim, instead of being vindictive or instead of trying to be petty and try to hurt people or anything of that sort, I watched him for a matter of a few weeks clean up what some people take years to clean up, because he was willing to take things to a higher level and think about things in a much better regard as far as long-term visions. And his business acumen came out so great in this dire time when he was able to put his personal desires of, hey, I want to be able to do this, and I want to, or wanting to hurt them even worse. He never once said, hey, how do I hurt them? It was more so, how do I get back to making money and let them get back to making money? If they want to do these things, they can go do them on their own. And if I want to do these things, I can go do them on my own. And that 30,000 foot view of his own life is kind of what drew me to be his business partner, because most people can't get themselves out of the weeds to really think about what's the smart way to approach this, as opposed to what's the right now, what can I do to hurt them so that they back down. And let's be honest, the majority of the time when you're talking about entrepreneurs, you're talking about alphas, and you're talking about people who, when they get bit, want to bite back in a bigger way. And Tim was able to take that step back and say, you know what, I'm not looking to bite them. That doesn't do me any good. What I want is to find a way for them to be happy and for me to be happy, and for both of us to be able to shake hands, walk away as, respecting each other as business people, and just moving on with our lives. And it was really eye-opening. I think at that point I had been your attorney for 4, 5, 6 years. And just watching that really opened my eyes to, because I've seen a lot of partnerships that don't end that well, and people don't think about it that clearly. And it really puts into perspective the kind of person that you are, or you were in that time. And it made me realize the kind of people that I would want to be involved in. And, a couple of years after that, not too long after that, we had started doing some deals together, and the deals got progressively larger. And, whether it was lending money or partnering up on various deals, it just progressively got bigger and bigger, because I already had 6 years of comfort knowing that I had seen all of your operations from the inside, and more importantly than anything else, knowing how you react when your back is up against the wall and you're dealing with a divorce between partners, and seeing where your mind was rather than being down in the dumps and how do I hurt people, seeing where it was. It really gave me the kind of, I don't know, the
comfortability.
Yeah, the comfort to say, this is somebody that I would trust with some of my money, or with my family money, or with partnership on this, or we've done a couple of very different deals in various, whether it's real estate and some business deals, and that comfort is all from experience. It's actually one of the things that you taught me is relationships. I went out to the people that I know already, and I built the relationship over years and years without ever knowing I wanted anything from these people, whether they be family members or people I've known my whole life, or even clients. And when I went back and told them, hey, I'm partnering with Tim and we're doing various things in the real estate realm, I almost had money thrown at me because these people I had built my reputation and my relationship with these people for a number of years and never asked for anything, and never offered any more than what was there. And
I like where this is going. So I want to come back to those relationships and raising money for deals from your existing network, because of those relationships that you have. Before we dive into that, I think this is an important piece that we're talking about, of good partnerships and bad partnerships. As an attorney, you know better than anybody, how to set the stage, and that you cannot predict what's going to happen in the future. And I think that's probably what happened in my situation. Life happens, business happens. When you lose money, I'd say we lost money, but we had short cash flow type of things, where we had a bunch of money in a 1031, and we had some cash flow issues before we were redeploying the money. And so that came up with some issues. And so when you're not making money, you see how somebody really comes out, right? God forbid you make money and people can get really ugly, right? And so for us, I think where I went wrong is everybody looks at a business and they think everything's all going to be glamorous and amazing, and they don't realize, even for better or worse, or not even trying to be malicious, but life happens, right? Like, you could have kids, you could have a relative get sick. Maybe you don't want to light the world on fire and build this monumental business anymore. Maybe you get sick and you take a step back and you say, hey, I just want to spend time with my family. And that's okay. But how is the business set up to make sure that you're not adversely affecting your business partners or anything in that regard, right? And so for me, I think it got to a point where life happened. Life was happening for them. Life was happening for me. And I think the biggest issue that I made was that we got married with everything that we did across all businesses. Versus different than our partnership. We're partnered on a per deal basis, and kind of like as a profit share based on how well the company does overall. So if something happens to me, if something happens to Fadi, no problem. I can keep on growing my business. He can keep on growing his business. It doesn't adversely affect all of our other business. For everything we do have together, yeah, we are partnered on, but it doesn't stop us from doing other things. But we choose to be in business together versus being forced to be in business together. I think that's an important piece that we've been able to kind of dial in over time.
Sure. And a couple of things from that. Number one is, everybody thinks everything is going to go great, but make sure you have your paperwork together, because most companies are going to end up in a situation at some point where the partners don't agree. It's just reality. Whether it's because you guys didn't have aligned visions from the beginning, or whether it's because your visions have grown apart over time, it doesn't matter. At some point, there's going to be hard questions that need to be answered. And so number one, your operating agreements, your joint venture agreements, your documentation need to be there. But number two, this isn't just a partnership issue. It could be an employee issue. Exactly the same principles apply. And that is, you need to set expectations early on. You need to make sure everybody's on the same page, whether it's training or an employment agreement, whether it's a partnership agreement, an operating agreement, whether it's a conversation that's memorialized, just saying, here's what I expect from you, here's what you expect from me. How do we move forward and keep those expectations in line? And the reality is, at some point, those expectations are going to change. as the business grows, my place in the business may grow, my place in the business may shrink depending on what direction the business takes. But you've got to be prepared for all of those things. I've been fortunate and unfortunate enough to be a part of many, many different business breakups that, as I said, I didn't have to personally be involved in, but as an attorney, I was involved in. And I've seen brothers and siblings that get into arguments. I've seen cousins that get into arguments. I've seen, the bottom line is everybody thinks things are going to be great initially, and then things start to really pile on. Everybody thinks that what they're bringing to the table is the most important part, but eventually, sometimes your portion shrinks or your portion increases, and then somebody feels like it's unfair, and you got to have expectations set in order to avoid that happening from the beginning.
Expectations is everything, man. In every relationship, whether it's with your spouse, with your kids, with your business partners, with your tenants, with your business or your joint venture partners, your employees, doesn't matter. Expectation setting is everything. And setting very clear expectations of who's responsible for what, and then putting metrics in place probably to measure those expectations and measure and be able to account for and keep people held accountable also. So all important stuff. So let's fast forward. All right. So I go through the business breakup. I start doing business on my own, liquidate all those properties that I had with those partners, and ended up getting into the turnkey space, was flipping some houses and trying to keep the lights on that way. Meanwhile, I'm investing in some apartment buildings out of state with some other business partners and helping sponsor some of those loans, raise money, do some things like that. You're still our attorney, helped us start up the management company, all sorts of different things. And so eventually it came to a spot where I was actually buying this office and you came in as a private investor on this office, right?
Absolutely.
So about 250 grand? I think 250 grand Fadi initially lent me in order to buy the office and kind of get some construction stuff rolling. And then had a good relationship, paid them, and I think, pays you off majority of it initially, and then a little bit of it went a little bit long.
And then we rolled it into another deal.
And then we rolled that into another deal.
One after the other. And we've done numerous deals at this point. Even before I became part of every deal, we had done numerous deals together. And, based on what I had seen his performance with other people, based on, the legal work I had done, based on some of the settlement payments that I had sent out on his behalf, some of the times we had conversations about, hey, Tim, why are you paying these people a full year in advance for all the interest? And you're like, well, I want to make sure they understand that I'm taking care of them. And, these are all the reasons why I got more involved. And then when you and I started talking about partnership, these are all the things that are filling the back of my head. And these are all the things I'm thinking about as Tim is asking me to take all that entrepreneurial spirit that's inside of me and take the 8, 9, 10 years of building my business and kind of put that to the side so we could grow something together. And, one of his famous lines is one that he used on me, a few years back when we started talking about this. And he goes, I would rather have 25% of a watermelon than 100% of a grape. And I go, am I the grape in this situation? Because and he did. He helped me realize that, my law firm, as much as it provided what I needed it to provide, and it created the relationships that I needed to grow to where I am today. It was a grape mentality. I was thinking about keeping 100% of something small for myself. And in reality, I was capable of being so much more by partnering up with Tim and with others. He helped me realize that there are other people that I could be partnering up with, and I have. And it's been an absolute life-changing experience for me, just getting to know the fact that I could rely on other people if you set those expectations the right way.
What do you think was the catalyst in the mindset shift? Do you think it was the mastermind?
100%. There's no doubt in my mind that 2 years ago, basically right around now, 2 years ago to about the date, my entire life changed because of going to what Tim called a mastermind. And I kind of blanked and had no idea what he was talking about. And then he said,
a bunch of guys sitting in a circle, master doing what?
So Tim convinced me, believe it or not.
No, Fadi, you're going to love it, dude. Come out and hang out with us.
He convinced me of a cheap attorney to pay money to come to an event where
thousands of dollars
to sit in an event where I just talked to other people about my problems. And I said, it doesn't exactly sound like my thing, but he also paired it up with a Cavs suite during the playoffs. And so I said, you know what, worst case scenario, I go to this suite
I did it that way.
And I have some fun. And so I came to my first mastermind, and literally it was a mind-blowing experience. I have changed basically everything about my life financially based on that first mastermind. And then a few months later, when he invited me to my second mastermind, I had changed almost nothing, but decided I was going to. And when I went into that room and sat across from...
However, you did raise $700,000 for a deal 30 days after coming out to the first mastermind.
So that's part of...
So it was... Wheels were turning.
It's part of the hey, I'm setting things in motion, but I haven't done it yet. And then there was accountability in that second mastermind of, out of the 15 people that were there, 3 of them had been in the prior mastermind before. And they asked questions about, hey, have you done this? Have you changed that? And the bottom line answer was, I haven't changed as much as I should have. And so after that second mastermind and the accountability and once again, reaffirming everything that I heard and everything I learned in that first mastermind, I decided I was going to make big leaps. And legitimately, I'm 100 times better off now than I was back then, not just from a financial perspective, even though that's true too, but from a lifestyle perspective, I'm working just as hard as I ever was, but I'm so much happier with that work because I've got a team of people around me that are constantly getting things done outside of me. We are able to grow a much larger pie together because we have a few key people doing what they're good at in various places instead of me doing everything across the board. I used to laugh and tell people that I had a terrible boss. My secretary was shit. Nobody ever listens to me. And people would laugh and go, don't you work for yourself? I go, yeah, my boss is a dick. My secretary is me. So she's terrible at her job. I'm terrible at my job. Nothing is getting done the right way because I'm relying on myself to do everything. And it was really the masterminds and the mindset shift from those masterminds that allowed me to really grow my personal pie, whether it's financially or whether it's just the business aspect of my life. And believe it or not, that very quickly translates over to the personal life too.
Yeah, big time. So how do we, all right. So I see Fadi going through this transformation and I realize that he's an entrepreneur stuck in an attorney's, business, right? But he's got an awesome skill set, a fantastic skill set that actually counterbalances what my skill set is. My skill set is more, the marketing, the sales, the interactions. And although Fadi's a hugely personable guy and really good at that, he's also really, really good at the details, right? Really good at making sure all the T's are crossed, I's are dotted. Hey, let's just rock and roll, move forward. I'll jump and then figure out how to fly on the way down kind of guy. And so we're really good at balancing each other out on the business side of that. So I see Fadi going through this mental transformation. We start doing some more deals together, start investing in more projects together, and gets to a point where, this is a multiple six-figure talent. And I'm at a place in my business a couple of years ago where we're doing well, but we're not to a place where we can hire somebody on for multiple six figures. So I'm thinking, what is he looking for? He's been sitting through enough masterminds and understands business, his family, a lot of entrepreneurs, they understand that legacy wealth, right? That earning residual income, earning passive income, and not necessarily just the transactional income that attorneys get paid. And so Fadi, I realized he's looking for that. He's got a couple other businesses that he's got his hands in, and but really has known real estate his whole life as well too. And so I'm thinking, how can we partner up? How can we joint venture where I don't have to get married? He doesn't have to get married to me. And at the same time, it solves his issues of creating that legacy wealth of getting equity into projects. At the same time, it solves my issues of not having to take on an employee for multiple six figures, right? And so we thought, hey, what if we just joint venture on deals? And we started joint venturing. So Fadi earns a base salary, just like everybody else in my company does. And then he gets equity in all of the projects that we do. So it's a way that I could pay him a salary that was enough to make him feel good and see money from day one, and then understand the long-term mentality of having equity in deals where all of a sudden he gets a percentage of the refinance proceeds. He gets a percentage of the cash flow. He gets a percentage of all the ongoing profits and equity that grows in the properties as the principal amount is paid down and as the property appreciates over time. And so it's been a massive win for you, a massive win for me, because I'm able to attract A caliber talent without having to stroke a big check right now. Now, it does cost me a lot of equity, a significant amount of equity. It increases equity by 7 figures since he's been working with us. And it increases net worth by 7 figures since he's been working with us. But it allows me to stay in my genius zone, allows him to stay in his genius zone, and me giving up 7 figures in equity and projects allows me to create multiple 7 figures, because now I can do more deals. We can do more deals together and be involved in more stuff together. So, one of the things I tell people, like, wealth is not a finite amount. There's not a finite amount of wealth. Wealth is like sunshine. There is plenty of sunshine for Fadi to get sunshine, me to get sunshine. Him getting more sunshine doesn't take any sunshine away from me. And I think wealth is the exact same way. The more wealth that he gets, there's plenty. He's not taking any wealth away from me, and we can actually make more wealth together. 1 + 1 = 3 in this scenario. So it's powerful stuff, and it's been a major mindset shift for all of us. And because of us being able to focus, I'm happier because I'm not doing all the things that I was doing, like reviewing legal documents, which is not my genius zone. My highest and best use of my time is doing podcasts, is sharing on social media, promoting others, helping other people get inspired to go and build legacy wealth themselves by buying apartment buildings. And maybe we can do some more deals together. They can actively invest with us. They can passively invest with us. Somehow we can start doing some more stuff together. And again, rising tide floats all boats kind of a thing. So it's been really, really impactful that we've been able to figure that whole piece out. And again, we're joint venture partners because he can still go out and do other deals if he wants. I can still go out and do other deals if I want, but I don't want to. Why would I want to do that? This is like, it's too good of a relationship. It's working out way too well to go outside of that.
If it's not broken, don't fix it. Right.
Right.
So we keep seeing what we're able to do together, and there's no reason to go out and listen. I'm not saying he doesn't do things outside of what we do, and I don't do things outside of what we do, but there's just so much going on with what we're doing together. Every day it gets bigger and it gets better. And sometimes we look at each other and we wonder how it's working out so well. And, we got to thank God every day for what is going on in our lives. But it's also because we trusted in each other. It's because we trusted in, the team that Tim has built. Even outside of me, he's got a number of people that work for him that are just absolute studs doing what they've got to do every day, day in and day out. And, it's that kind of team. It's that kind of mentality. It's that, if he talks about sunshine and, not taking sunshine away from each other, it's actually quite the opposite. It's almost like we're bringing mirrors into a small room and letting a little bit of sunshine in, and those mirrors are brightening the entire room because of the fact that, they're just bouncing off of each other and creating more and more light.
Instead of adding, it multiplies.
Yeah,
right?
It really, tremendously multiplies. The 1 + 1 = 3 is kind of an understatement, because as you add in 1, it doesn't go to 3, it goes to 5, and then it goes to 15. And before you know it, you've created a giant out of, off the shoulders of a couple people who each one has their specialty. They have their tasks, the things they're good at, but because you've put the right group of people together to do those tasks, they complement each other enough to really just create, 100 instead of 1 + 1 = 2.
It's called abundant mindset, not scarcity mindset, abundance mindset. There's plenty to go around for everybody. So speaking of, we're moving into next business venture that we're starting together, which is we're launching a 506c, which is a general solicitation, accredited investors only type of investment fund that we're going to be raising money for different investment deals, apartment building deals, some bridge financing, bridge gap financing, gap lending, all that kind of stuff. So a lot of good stuff going on there, working with 2 other groups of partners that are involved in that with us too. And maybe you can talk a little bit about the relationships, going back to what you initially talked about, of those relationships that you currently already had Then when you talk to him about you investing in real estate and you partnering up with us and start doing some deals together, people are throwing money at you. What did that relationship-based business and lending all look like? What did these people, because you already had a lot of credibility built up with them, they were already interested in investing with you and kind of going to the next level, right?
Absolutely. So the first big deal that Tim and I did together, and I say big from my perspective, we had done a number of deals together, but in the 100, 200, 250, I think there was a 300 in there somewhere. But Tim came to me and said that he would, he had a deal that was coming up and they needed to close pretty quickly. I believe it was 5 days or less that we needed to.
Always, dude.
Always. He had 5 days, I believe, to raise something like $700,000 on a deal. And
not worried about it.
I remember very specifically, it was Memorial Day weekend of 2 years ago, if I'm not mistaken. Yeah. And, I get off the phone with Tim on Friday night, and, Tim's always working. It doesn't matter if it's 1 o'clock or 3 o'clock in the morning. So he gives me a call. I want to say it was 8 or 9 PM, and I was at some function, and he's telling me about all this and how, based on the last 2 masterminds, he really thinks that this is something that I should get involved in because, I do have people that trust me and I do have people that want to partner with me. And, so I said, you know what, I'll give it a shot. We'll see how it goes. I think I could get at least $300,000. And so I got off the phone with him, and somebody asked me what was that about? They overheard a couple words of what I said. And it was a close relative of mine. And I said, this is what's going on and blah, blah, blah. And they're like, well, count me in for like $100,000. And as we're talking about it, somebody else butts into the conversation, and then 2 more people. And I'm sitting there with a group of 5 people, and 5 people committed $100,000 each. And there I was with 500 of the 700. And before I went home that night, I had 200 more. And it worked that quickly because I had already built the reputation, number one, as an attorney of doing my due diligence and of putting together the paperwork. And so they were going to rely on me to put the paperwork together. Number 2, I told them exactly what we talked about earlier, which is I've known Tim for a long time, but even more importantly, I've been doing his legal paperwork for 6 years. I've seen what he does in all types of scenarios. I've seen what he does with his back against the wall. I've seen how he treats his investors. Now based on my credibility with them and Tim's credibility with me, they were willing to partner with us, and we all got together and we put together an investment package, and we bought a piece of property in Pennsylvania that we eventually sold in an auction for significantly more money than we bought it for. And we've still got a couple lots of pure profit left in that thing. And at some point when we
investors made great returns, everything went great. So, it went a little bit longer than we wanted it to, but
I actually just got a call last week from one of the investors saying, hey, I was so happy with everything that happened in Pennsylvania. Do you guys have anything else going on? And they're coming into our next deal in Westwind too.
And that's the thing. Like, even if things get extended, which they always do in real estate, right? We got multiple deals right now where, the acquisition's getting delayed and all this other stuff, and things, hit the fan. Is how do you deal with those things? And are you communicating with your team? Are you communicating with your investors? And then just letting them know what's going on, right? So they don't want to be left in the dark. It's all about communicating. And one thing I want to go back to that you mentioned is when Fadi is raising money for deals, there's 2 things you need in order to raise money from somebody, private money for a real estate deal. 1 is trust. They need to be able to trust you. And 2 is respect. And so Fadi's contacts, they trusted him because he's been their attorney for so long. But they don't necessarily, and they respect him in that regard, but they don't necessarily respect him in the regard of investing in multifamily or commercial assets, right? Although he has a little bit of business acumen from that regard. It's not his full-time business. So it'd be like, going to the shoemaker and asking him to go and invest in gems or something like that, right? Just it's not cohesive, right? So, or congruent. So what he did was he said, hey, I know Tim. I trust Tim. You guys trust me. I trust Tim. Tim knows his stuff. Tim's been investing in real estate. I've seen how Tim interacts, and he edified, built credibility in me as the expert. And because they trusted him, then they respected me, but they don't trust me. They don't know who the hell I am. So even though they see me on, in a Facebook ad or on Commercial Empire on front of a stage or something like that, they don't trust me. They respect me for what I've done in business, but they don't trust me until we built a relationship, but they trusted him. So do you see how we were able to merge both of those things? Because he had the trust, I had the respect, we were able to do business together, and his contacts were willing to invest in one of my projects because it completed the full circle, and we were all able to make some really, really good money together. So it's a really important piece that I don't want you guys to miss out on is in order to raise capital, in order to raise money for deals, you need trust and you need respect in order to really accomplish what you want to accomplish there.
Yeah. And, going back to what I was saying before, as far as the credibility and the respect, I had, whether they were relatives or whether they were, clients of mine from the past or whatever it is, I had always conducted myself in a way to protect everybody. And Tim, I'll give you a lot of credit for doing this same thing. I always put the interests of, the people I'm working with ahead of my own, and putting the investors' interests ahead of our own is kind of where we've gotten ourselves to where we are now, because people know, anybody that's done a deal with us knows that they will be taken care of. And that's the most important thing for these people. You're talking about, for some of these people, it might be play money. It's a couple bucks to them because they've got a ton. But for most people, this is going to be their life savings. This is going to be what they have left of the business they sold, or of their parents' house when they sold their parents' house. This is all they have to build their legacy wealth from. And so for you to take it from them, you better be giving it back to them, or you're going to lose all credibility from them. And more importantly, they're going to have nothing left. And when people have nothing left is when you get into big trouble. So when you take care of those needs first, and you take that little bit of legacy wealth they have and you expand it for them, there's such a respect and a thankfulness that you get out of it, that people are just so appreciative of the fact that you are changing not just their futures, but potentially their children's futures, or if they have enough of it, their grandchildren's future. And as you build more and more for these people and for their families, that respect absolutely grows more and more. But so does the appreciation for what you're doing for them.
The stewardship of other people's capital is a massive responsibility, massive. And what I've come to notice is that, when you go to somebody and you ask to raise private capital from them, they're looking for three things, right? One is, what's the asset? What am I investing in? It's important, but it's not that important, actually, when you think about the other two. Two is the return. Is the reward worth the risk, right? Is it worth me investing in this thing? And is the amount of money that I'll receive worth the potential risk of losing money, right? That's important. Number three is the most important. And that is, does this borrower, or it's really the credibility of the borrower. Does this borrower have the fortitude to repay me my money? Do they have the character to make sure that I'm going to get my money back? And I think one thing that we've done really, really well is convey that message to our investors that, like, I've spun the entire traditional syndication world on its head, because I don't take acquisition fees. I don't take asset management fees. I don't get paid until the investors get all of their money back. And that's how we've structured all of our deals. And when you're in the boat rowing in the same direction with your investors, and they know that your goals and your visions are 100% aligned with theirs, that they're getting paid regardless of me getting paid, that means I'm taking care of them, and I don't get paid until they get all their money back. So they not only made a great return, but then they keep equity in perpetuity. And then finally, at that time of the refinance, that's where my equity kicks in. That's where I start earning returns from the refi proceeds and the cash flow and all those other things. But our goals are aligned. Our visions are aligned. What we want to do together, that makes a lot of sense. So I've been able to convey that character of, I will do the right thing. I'll make sure that you get paid first, and I'll get paid secondarily. And because of that, it breeds a lot of loyalty. There's a lot of people who really respect and really appreciate that. And when somebody else dangles a carrot in front of their eyes of, hey, a couple percentage points more of interest, They say, no, Fadi's my guy. No, Tim's my guy. I want to invest with them because I'm already comfortable, because we're partners, because we've already done deals together and already have that comfortability with them. So it's powerful stuff, man.
So when you're raising money from people, if it's your first time raising money, it becomes pretty evident quickly that 100% of the reason they're lending you that money is based on your relationship with them. You knew them in the past. That nobody's calling you out of nowhere saying, hey, I've never heard of you and you've never met me and I have no idea what you're doing, but I want to give you money. They have to know your story. They have to know who you are. They have to have a comfort level with you. They have to have, there has to be a relationship there. So you start with relationships. The next step from there is you've raised money from people you have relationships with. Now you're raising money with people, from people you have credibility with. They've seen what you've done in the past. They've seen the returns that you've given them. They see that you're dedicated to getting their money back and to getting them returns. And so you've elevated yourself from just a relationship to a credibility. And then from there, that's where you elevate yourself to large institutional. You've built credibility now.
Mm-hmm.
You've built a background and a portfolio. So it starts with relationship and it ends with credibility. Once you've built that credibility, that's where you're going to end up getting into the bigger dollar amounts, getting into the larger deals and the larger dollar amounts. Because until you get to the point where it's not just, I know you and I like you, but I also I have a comfort with you, and now I see what you've done in the past. You've laid the track and you've shown that background and that track record. You're not really going to be able to raise the dollar amounts for gigantic deals. And it makes perfect sense, right? Nobody comes to a novice and says, here's $100 million. They come to a novice and they might trust you enough based on prior relationship to say, here's 50 or here's $100,000, but not here's 100% of my net worth. But when you get up to, hey, I've shown 5 years, 10 years, 15 years of track record, of course, people are going to trust you more. And they should never give you 100% of their net worth because they want to keep their eggs into separate baskets and diversify. But at least you're going to get a significant portion of that. And you might be the person who helps them diversify. And, that's kind of what we're doing with our fund. Instead of having our investors who have been, gracious enough to be part of 1, 2, 3, 4 deals, some of them significantly more deals than that. We're now giving them a chance to be part of every deal moving forward, to diversify across a portfolio of potentially hundreds of different deals. And that's just the natural progression of going from, we had a relationship and we did one deal together, to now we have a real substantive understanding of what it is that we do, what it is that you want, and we can build something great together. And that's kind of where we're going with the fund. That's how we've structured the entire how we do our deals, is by getting feedback from our investors and understanding that they want predictable returns and some of the equity in perpetuity. They also want it diversified across multiple projects versus just one project. And so that's why we've done this, because we've listened to our investors and they've communicated this with us. We asked them, and we're asking them what they want, as opposed to somebody else saying, hey, here's what I got. You either want it or you don't want it. And we've built that relationship. And so, and that's actually, we've changed a lot of what we've done over the years based on that feedback. So, hey, we want to be able to, tax defer some of this stuff. Well, we sat down with our CPAs and Tim spent thousands and thousands of dollars on getting a structure together that would allow our high income, high net worth people to make this money with us, but not to be paying, 40, 50, 60% in taxes on every dollar they make, but instead finding tax advantages to the way that we're structuring things. Or as far as depreciation, how many people reached out and said, hey, I want to be able to start depreciating assets, and I want to start to make money through equity instead of just promissory notes where we all started off. And when you hire the right people and when you bring in smart enough people to put together a structure that works for your people based on their own feedback, that's where you start to succeed. That's where you start to see people say, yes, that's exactly what I was looking for. I can't believe you guys are finally, putting together exactly what And the best way to think about it from my perspective is, what would I want? And that's kind of where Tim and I have grown.
How would I want to lend my money?
Yeah, that's where Tim and I have grown together. Is I came in first as a private lender to him, and then eventually when we started partnering together, it was because we found a way to do something that I would and I have it. And every single deal we've done since I came on board, I've had my money and family money involved in every single one of them, because I truly believe that we went out and you especially went out and created a product that I buy into and that I believe in, and that I would want my own money invested into. And
absolutely.
And that's kind of one of the more important things that I want to bring out is, it's not just about the relationship. It's about giving these people what they want and putting yourself in their shoes. What would you want, and how would you want to be treated? And if you end up in a situation where you think, hey, I wouldn't do this if I was them, then why would they? You're ending up in a situation where you have to make a con artist out of yourself to get what you want, and that's never the situation you want to be in.
Yeah. It seems like such common sense, right? That you would ask your investors, that you would think about this stuff, but a lot of people just don't do it. They take the path of least resistance, like water, it just floats downhill kind of a thing. And it's just, they don't ask themselves those questions of, how do I make it better? They don't pay for A-class talent. I think there's been a couple themes in this conversation. Is one, making sure that set good expectations, both with your employees and your lenders and your partners and everybody else that you do business with. That's been a big one. Two is everything's, starts with relationships, especially if you're getting started in business. And as you continue to grow your business, like my credibility is what I protect more than anything else, and my character and my reputation, because that is something that you cannot pay for. Like it can be ruined in an instant. So you got to make sure you're on point with all that stuff at all times. You're always doing the right thing and always performing, and making sure that you're putting other people's needs and other people's goals and other people's benefit in front of your own. So that's a big deal. And, common sense is not that common. Paying for professionals, make sure you're surrounding yourself with A players. Yeah, a lot of people don't want to write that check, but we've written that check many, many times. I spent tens of thousands of dollars just in consultations with attorneys, with CPAs, with tax strategists, with different other masterminds, and getting feedback from other investors and fund managers and all this stuff in order to structure this thing the way that we've structured it. And I would put it toe to toe against anything else that we have out there. So I'm going to shamelessly plug our fund, but would love for you guys to take a look at it and talk with us about it. If there's anything that we could do, happy to answer any sort of questions and stuff. But this guy runs the entire fund, knows his stuff inside and out. We're partnered with a couple other folks who have run residential funds for a very long time. And technically, each one of our deals is its own security, right? So we've been doing this on an individual basis for a long time, and now we're looking to really scale it up on a big level. So we have some ambitions of raising 50 million in the next 6 months. And I have no qualms about us not being able to do that. So I know we'd be able to do it, and probably launch in May?
I would say so.
So hopefully you guys got a ton of value out of this, Fadi. I appreciate you being here, brother. Always fun chatting with you, talking shop and talking business, and excited for what's next, man.
My pleasure, and always excited, man. Every day it just gets better and better. So make sure you're always working towards something big.
Mm-hmm. Love it. So hope you guys got a ton of value. Love you guys. Be your best. We'll see you on the next Legacy Wealth Show. See ya.